There's still cheap money out there because the rates haven't gone up. You've got about 45 days until the first rate hike. That means there's 45 days of free flowing money. Investors are preparing for down the road, but as a trader, I'm looking at this 30-day window right here, and I'm saying to myself, okay, money has to go somewhere. Inflation numbers keep going up. They told me it was transitory. They lied to me, Stocky. Yes, because they had to calm you the fuck down. Then they said, well, transitory is kind of like saying indefinite, right? It's not going to last forever. We just don't know how long it's going to last. But as inflation kept going up, they retired the word because either A, they were wrong, or B, they realized people don't understand what they're talking about. And you're saying to yourself, Stocky, if inflation is still going up, why in the God's name is the market up today? This all goes back to yesterday. Powell was doing his confirmation hearing, and most of it was political grandstanding. But there was one little nugget that came out of it, and it's something that we usually have to wait for an FOMC meeting. Confirmed rate hikes this year. Now, we already know it's coming, but he just confirmed it. The question becomes, based on the dot plot and what the first rate increase is going to be, which is most likely going to be in March. Two questions that arise from this. Number one, how many basis points are they going to raise it by? Because they have two options. They either slowly raise the rates because they're already clearing their balance sheet and they're already tapering their asset purchases, right? For those of you guys who are like, well, this is speaking Greek to me, Stocky. What the fuck does clearing balance sheet and asset purchases? In other words, they got about $9 trillion in shit they've bought up that's on their balance, including government bonds and treasuries and like that they're going to mature or sell. So they're going to clear all of that. And then asset purchases, they're going to stop buying as much IOUs from the U.S. government every month. From 120 billion to 105, and then so on, so on. They're trying to taper. They're trying to ease the brakes on all the printing and the spending. Now, you're saying to yourself, okay, Stocky, now I got that. What the hell does that mean with March and dot plot? I don't understand all that. I have YouTube videos, but TLDR dot plot basically is a little chart that they have where they measure ranges of expected inflation. As they keep rates low, it's cheaper for people to borrow money, meaning more people borrow money, meaning more people build things or buy things, which generates an economy. But the longer that goes, the more money goes into circulation. The more money goes into circulation, the less it's worth. Inflation. At least that's how it's supposed to work. Now, there's so many other factors, including bottlenecks on supply chains and predatory, purchasing and demographic shifts and stuff like that. But whatever. Now that we know that March is most likely the first rate increase, there's two options the Fed has. Either A, they pull the Band-Aid off. Just say, fuck it, we got to stop this. We got to pull the brakes on this train right now. We got to get it going. We just got to fix it now. It's going to hurt, but we got to fix it. So they raise it 0.5 basis, 50 basis points or something. To get back to that 2 to 3%, that would only take 4 to 6 rate hikes in the next 2 years. That would hurt, but it would save us more in the long term because we're going to just full stop. Or instead of 50 basis points, and I'm just throwing these numbers out here, guys, just theoretically speaking, 50 basis points times 5 or 6, they do 0.25 because they want to kind of like ease into it. But that means you're going to have to do more rate hikes over a longer period of time. And that brings uncertainty. Investors hate fucking uncertainty. So now that we know that, let's go back to why did confirmed rate hikes help the market go up today despite the CPI? He stated yesterday that they still believe it's transitory and that inflation is going to dip this year whether it likes it or not. He basically came out and said inflation is going to go down this year whether it likes it or not. Either A, supply chains and everything kind of evens out, labor force participation goes back, which, funny, we're actually seeing 4.5 million people a month leave the workforce forever, so I don't know where they're getting that from, and we have a record number of job openings. But either that naturally flatlines it and brings it down, or we force it by raising rates. So investors are like, okay, 7%, it's an increase. Not a crazy increase, but it's an increase. But this might be the top. And we've had a sell-off the last couple weeks. Fuck it, let's buy the dip. Now, for Stocky's personal thing, I'm looking at this in a much shorter range as a trader. Not as an investor. Investors, I buy dips and undervalued companies that do that. But as a trader, I'm focusing on this window right here. March is when we're going to get a clearer picture. The consensus is March will be most likely the first rate increase. If it's 0.25 or 25 basis points, then we're talking a much longer process potentially. 0.5%, more of a hard stop, but more confidence in how long it's going to take to get back to somewhat normalcy. But in the meantime, that's 30 days. Couple things to understand. There's still cheap money out there because the rates haven't gone up. You've got about 45 days until the first rate hike. That means there's 45 days of free flowing money. Investors are preparing for down the road, but as a trader, I'm looking at this 30-day window right here, and I'm saying to myself, okay, money has to go somewhere. Real estate, well, rates are going up. What did we talk about last week? Mortgage applications have fallen for 3 or 4 months straight. Why? Because everybody's already saturated buying and refinancing. The chance of mortgage applications jumping up this report due to the fact that rates are going up and everybody's like, oh shit, I forgot to do that. Oh, but I better do it before it's too late. So now we did see applications jump again. Now, something else to keep in mind, okay? Something else to keep in mind. Real estate bubble or market is very high. Hard to park money in that right now. Very risky. You want to combat inflation, but a lot of investors are thinking, okay, this is the top for inflation, hopefully. I'd like to put my money in bonds, but bonds are fucking trash right now. Absolute trash. They'll go up. Maybe they buy now. I don't know. We'll see what the auction looks like next time. But bonds right now, in the next 30 days, bonds aren't really a place to put it. Keep it in cash? Well, you could keep it in cash, but with the inflation rate right now, it's just losing value. You might as well put it somewhere and make it work for you. Commodities? Sure, you could, but oil's already $80 a barrel. Some people are expecting $100 a barrel. Maybe, maybe not. I don't know. It's like buying the top. What does that leave? It leaves, I'm not talking about individual firms and individual blocks. Overall, that leaves equities in the market. What has the most value in equities right now? That giant bubble that burst. That is Spec and growth. Now, there is value still in some of the big blue chip FANG stocks. Netflix has definitely a lot of value right now. Google's back. Problem is, there's a few other things out there. Facebook, FTC just went forward on the antitrust. Discovery phase starts. That means the FTC is going to be able to have access to all of Facebook's records. Maybe some deep, dark secrets come out. Maybe investors are like, oh shit, this might be bad. Let me get the fuck out. Facebook has enough market cap that if it goes down, it could pull other FANG stocks with it. There's other things at play too, but there's money there too. But in my personal opinion, we're going to see lots of this on spec stocks over the next 30 days. Because nobody wants to hold for long term, but there's value there. I feel like we just see rotation, right? Like spec and growth travel stocks, and then into gene therapy and editing, and then into bio, and then into space, and then into EV, and then into solar. You know, like it just feels like, at least that's my prediction for now, that from 115 to 215, this is the sector I'm going to be focusing on. For those reasons. I could be 100% wrong. But remember, when you're investing and trading, you're always trying to get ahead of it, and either you're right or you're wrong. This is what I'm going to be looking at. So I'm focusing on not investing, not my investments and not my swing trades, but my day trades and my, and my scalping and some of the swing trades is going to be in this right here. And you might be saying to yourself, well, Stocky, there's a lot of spec stocks. Can you give me examples of each sector? There's a million of them out there. But you could be looking at, for example, travel. You could be looking at stuff like, look at the stuff that's been beaten down the most, like Trivago, easy, cheap stock that has value that people love to jump into. This is also airlines, beat down recently. I'm in Alaska Airlines right now. This could also be casinos. You could be in bio. I mean, there's a million out there. I don't even want to go into that. Space, you've got, right now, today I'm playing Rocket Lab because of VORB, which is the company that we talked about in the morning call a couple weeks ago when they were doing it's a sister company to Space, Virgin X, that was going to be IPOing and going public, and they announced that they have a third space flight today, this afternoon. They ran 30% yesterday. Space is another one, right? You've also got ATST. You've got a lot of them, right? Solar, you've always got, stuff like FSLR, you've got SunPower, you've got Canadian Solar, you got a lot that are there as well. Some of the big ones, SEDG, a lot of them. EVs, you've always got EV chargers, you've got Volta, you've got EVGO, you've got Chargeback or ChargePoint, whatever it is, CHPT, Blink. You have EV companies that are small companies like FSR, Nikola. Nikola's been big recently, and it's been great for day trading because they keep getting these orders in. You've got RIVN, which we played yesterday, and I sold for 30%, and then it went 150%. You've got XPEV. You've got Li Auto. I could go on and on and on. And I could keep going on and on. There's other sectors too, right? You've got finance, or Fintech, I should say. I think PayPal's going to surprise on the earnings, but whatever. I played the shit out of MasterCard already, but there's lots of smaller companies that are in there as well. You've also got, there's so many sectors and so many spec stocks that you could go into. Alternative energy, plug, CEI. I mean, there's so many out there. You could do Lidar, right? INVS, ELMS, batteries. There's so many out there that they're not all gonna be winners, but I don't think that now's the time to buy into a lot of these for the long term, unless they're ones you believe in, like I do with like Fubo or something like that. But as far as stuff to keep on your watch list for you guys that are day traders and you're looking, and when you can see pre-market or during the day, when you start seeing the big boys kind of selling off and you see spec stocks run like we saw this morning, you'll have your own watch list. And you can do that on TradingView or whatever your is. Make your own watch list. Do your research. Find your favorite spec stocks. If you believe the same thing, I could be 100% wrong here. But then each day, when you start seeing the sectors, you open it up and you see your sector and you see it's all green or it's all red or whatever, and you might see rotations and you might be able to have some opportunities there. Even if you want to swing trade equities over the nights or whatever like that, these are what I'm going to be focusing on. Okay?